The bulls hold for now, but so do the bears. So who's in control? This is Invest with Jacob. Okay, guys, so in yesterday's video, we told you that the bulls needed to hold our support box and push up over 51.33, and they almost got the job done, spiking just above it, but the bears stepped in and pushed the market down into the close. Now the question is, who's in control? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the big move down on Tuesday, the market kind of digested that on Wednesday and stayed inside the range. So let's jump into the chart and see who will break out first. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And the bulls held support at the end of the day on Tuesday and pushed back up out of there and then rallied the first half of the day on Wednesday up into our resistance level. I told you that 51.33 area here, 51.3375 was kind of where the bulls needed to hold, or bears needed to hold, and the bulls needed to push through. And you can see they brought it all the way up to 51.3450, spiking just above it, and then pushing down immediately off of that level. So off of this low, if we're expecting a wave 5 up, we would be looking for a 5-wave move to start that move. So this would be like a wave 1, 2, and then 3, 4, and 5 up. So for wave 1 here, you'd want to see 5 waves. Now, did we see 5 waves? I will give the bulls the benefit of the doubt here, but it's certainly not a pretty 5 waves. To me, it looks a little more corrective overall. But I'll give them the benefit of the doubt because this is a 1, 2, 3 came up and hit the 1, 2, 3, 6, which is a little bit short for all of 3, but valid. But then wave 4 comes down through the pivot, which is a red flag, but it does not get into wave 1 territory, so it's technically not invalid. And then they give us one more high for a potential 5 up into the 1618, which is a valid target for this 5-wave move. So there's some issues I have with the overall move. There's no real 4-5 of 3. Wave 4 comes down through the pivot. The wave 2 isn't very good. Overall, to me, it still looks a little corrective, but I am giving the bulls the benefit of the doubt because we are in a bull market and we are above support. So the benefit of the doubt goes to the bulls, but just know that I think that this is an ugly structure to the upside. Now, from there, if the bears are going to hold, you could count this as a and B, and we would want to see a corrective move to the downside in almost all cases because you are entering a supercycle 4 if we're talking about a bigger top. And if we're talking about a bigger top and a supercycle 4, that's an ABC move overall. So it would be a corrective move. We're not looking for an impulsive move to the downside, but we are looking for a fairly strong move. And because there were so many diagonals to the upside, you should see a lot of straight line selling like we saw on Tuesday, where this diagonal completed up here. They sold right back to the start of the diagonal and bounced and have held for now. So straight line selling doesn't mean it's impulsive. 5 waves means it's impulsive. So strong move down, but we'd still count it as likely an A wave, B, and then you'd look for the start of a C wave down that broke support. And you could get a cascading C where it doesn't really stop at the 1.0 and it extends because, again, this support level is a pretty big area. And it could push us right down into that 48.40 area, right around the Fed lows, 48.60 overall before we even see a slowdown if that's the case. So we would expect a C wave down off of this high because you have the move down. The initial move down is A, the bounce is B. And a C wave would also be impulsive. So you'd want to see 5 waves down from the bears. So far, we only have 1, 2, and the start of wave 3. You'd want to see continuation here. 3, 4, 5, down to this low for a wave 1 of C. Then you'd look for a bounce and an overall breakdown. Now, again, you can see straight line selling when diagonals are done. And if that's where we're at and we are done, they don't have to give you much of a wave 2. It can be very much a bounce like this and then down instead of a bounce up to here. So keep those things in mind. The key levels remain the same. 51.34 for the bears. They need to hold that level and push down. And 50.60 for the bulls to 50.50. They need to hold this blue box and push up. Right now, both parties have done their job. The bulls held the blue box. The bears held 51.33. So it's a race to see who breaks first back over this high. Very likely we're on our way to 5,300 or so, maybe 5,350. Back below this low and we could start to see some acceleration to the downside. Over on the NASDAQ. So on the NASDAQ, a little bit of relative weakness. Now, that doesn't mean that they didn't push up stronger in price or percentage of gain, because they did, but in retrace value, they did not. The ES retraced all the way to its 764, while the NASDAQ was only able to hit its 618, which was our target from yesterday. We told you the 18106 to 18170 was the common area, and 18250 is the line in the sand. They hit the 18170 area almost to the penny. They spiked just above it and pushed down off of that. And again, the NASDAQ doesn't have even a five-wave structure that I would give the benefit of the doubt to, because you have your 1-2 start here. And if you count this as wave 3, wave 4 comes down into wave 1 territory, and then you have wave 5 up. So either you have a diagonal for wave 1, a leading diagonal, which is possible, but we don't count on those, or this is a B wave bounce, and we're looking to start C down, and we'd want to see an impulsive move down here. And so far you have a 1, 2, looking for a 3, 4, 5 into this support area, one more bounce, and then a breakdown. So I can give the bulls the benefit of the doubt on the ES because we're in a bull market and they do have a valid five-wave structure. I can't really give them the benefit of the doubt here because the structure is not valid. 4 comes into 1 territory and we'd be dealing in a diagonal. That doesn't mean the bulls can't take this higher. It means that diagonals are less likely to play out, and until they start to show they're going to play out, then we kind of put them on the back burner and play the more bearish card. So it's a little bit of 6 of one, half a dozen of the other, where we're giving the bulls the benefit of the doubt on the ES but not on the NASDAQ, which overall would make me lean bearish because you would want to see bullish behavior on both charts. Now again, just like on ES, if they come back and take out this high and push through 18,250, then it becomes much more likely we head up toward this 18,640 area, 18,560. If it's a diagonal, you usually target the 1764, and that would put us right at that 18,560 area, which was our target overall anyway. So there is still alignment and a path for the bulls. It's just a little less clear than it is on the ES. So I'd be very cautious until I see a break back over yesterday's high. Once you see that break over yesterday's high, you can start to lean more bullish and look for that 5,300 area on the ES and 18,560 area on the NASDAQ. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. And once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it, become part of the trading team, interact with PT and I. Make sure it's for you. Make sure it's something you want to be in before you ever spend a penny. You can cancel at any time, and you literally have nothing to lose by checking it out. We also have our training material. We're just about done with our Advanced Elliott Wave course. We've talked a lot about diagonals in the last few months with these moves up, and one of the big things we're looking at is a potential bigger diagonal off the October 22 lows. This course helps you understand those complex structures and how to find the fib levels, how to understand the targets, measure them out, know when they should be coming to an end, all those types of things with advanced fib levels, the diagonals, the double, triple threes, flats, everything you want to know about complex patterns. The traders in my room already have access to this course, and you can see on the screen that they're absolutely loving it. It's helping them understand these complex structures and understand the market in a way that makes sense. Now, if this is too much for you or you don't understand Elliott Wave just yet, we also have our Elliott Wave for Beginner online course. This course is helping real traders make real money and understand the market in a way that makes sense. It can be very difficult to understand why good news makes the market go down and bad news makes the market go up, and that's because the news cycles don't matter. Elliott knew this a long time ago, and he identified key levels and understood what happened when they held and what happened when they broke. This understanding of the market gives you a huge advantage over other traders. The course itself is 25 videos in 3 sections where we go over the introduction, when your expectations, your mindset and emotion, the KISS method, and why it works, the chart setup and tools, every tool you need to use with Elliott Wave Theory, how to use it and why. And Elliott Wave for Beginners, where we go through each of the waves, all their parameters, how to measure them, how to find the levels, understanding what levels matter, understanding the pivot, the corrective depth theory, everything you want to know about making sense of an irrational market. Now, the cool thing about both of these courses, guys, if you don't want to pay for them outright, they are included in both monthly rooms. So if you join up, you get those courses for free. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material just saw. We trade the SPY and the QQQ, and we swing and day trade. So we trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, PT's income trading that you've seen day in and day out crushing the market, and his reduced risk binary method that is absolutely killing it. He gets you in at a cheap price, gets you big multiples on your money, and it's how he structures that trade that's so unique. Something kind of have to see to understand. That's another reason we give you that 7-day free trial. He also started a challenge account where you put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. Key takeaways for today. It's essentially a race. If the bulls can break back over this high from Wednesday at 51.34, then we would be favoring the market heading back to 5,300, 5,350 for new all-time highs. If, however, the bears can break down below this low and this support box, then we start to look for accelerated selling to the downside. Over on the NASDAQ, the same type of setup is in place. If the bulls can break back over Wednesday's high, then we would look for the market to extend to the 18.5 to 18.700 areas. However, if they break down below the blue support box, we would look for accelerated selling to the downside. Guys, that is your market update for today. I will talk to you tomorrow.